Thank you very much for having me. So I'll proceed right ahead. I'm excited to see the number of girls in the house. It normally just excites me to see more and more ladies venturing into actuarial science and wanting to make it in this very tough field. So congratulations to all of you. This is what you're going to cover today. So I'll begin by just a brief description of my professional journey. We'll also discuss the opportunities that are currently available in the private equity, private debt, and boutique investment banking. Then we'll discuss more interesting stuff, which is skills that make you get your foot at the door, and also competencies that will make you thrive in your career. The last three items are basically the same regardless of the industry, but more so in the wider fields. And here we're talking about fields that are not in your usual insurance, pensions, regulations, banking, etc. So this is about me. You've heard I'm a fellow of the Institute of Actuaries. I also have an MBA from Strathmore Business School. I graduated many years back from the University of Nairobi. And over my entire career, I've done quite a number of professional development courses. Apart from that, learning never stops. So every single day is an opportunity to learn. And the best learning is the learning that you learn on the job when you're doing new things. And so as a person, I just generally like taking on new assignments and new things, and especially things that are completely unrelated to what I've done professionally. That is the only way I've been able to grow in my profession. I started at Jubilee Insurance. Those are many years back. I do remember vividly my first day at work. And sometimes you meet people along the way and you don't know how much they impact how your career turns out. And this was really the cradle of where my professional life was born. And I remember the time we just finished the university, and we were wondering, so what's next for us? Not many people knew a lot about actuarial science, so the only place to go at the time was, the traditional places, insurance companies, consultancy firms, and pensions. And so for me, I went to Jubilee, and this is after. This is after my dad convinced me to stay in Kenya because I was going to go down to Tanzania, where I had been poached by Alliance to do some work for them. But my dad sat me down and told me, Teresa, that market is too tiny. You'll never get anywhere. Please, 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 even if you're working for free, just sit and work in Kenya. And so I did my first 2 years of working at Jubilee Insurance, where I did a lot of pricing for group life. I did a little bit of life. This is on the actuarial side. We also had an actuarial department then, and I was able to just, work there a bit, and also did some bit of pension. But very, very quickly, I realized that's not what I was called to do. And what I did immediately is to transition to try and look for opportunities outside. At the time, all the investment functions for the Jubilee were done within the finance team. In fact, it was just a 2-man team. And I would, stay late so I can at least get an assignment or two in that department. And they used to sit in the executive office. So I would just find business to just, get there so I can just have a word or two and know what they're doing in the investment and see whether I can at least do something. Well, I got some bit of, here and there, do this, do the other, but not to help much in terms of just growth of my career. And therefore, very quickly, I decided to look for opportunities in the investment world. And not just the traditional fund management, but the alternatives. And that is when I joined Centum Group. Then it was called ICDC Investment in the risk department. So I worked there many years. And it's important for me to say this because I can see a number of girls in the room. I had to work very quickly the first 3 years to just stabilize myself, then take a break because I needed to have children, and then go back and ramp up my career into the diverse fields that I wanted to specialize in. So what I'm trying to say here is that it's important to plan your career such that you're growing into higher levels of management before you start your family, because then becomes very difficult. Time doesn't wait, and people don't wait, and organizations don't wait for you, so it becomes very difficult to advance much to it when you're having your family very early before you get into at least a management level. So I did a lot of time there, so about 13 years, which is really, really, really a lot. So I'm very loyal. And after the 13 years, I decided to call it quits. I was done with the employment, and I decided to start my own business. And that is when I did. I went to do exactly what I had been doing. So again, what I did is that I used my experience at Centum Group as a training ground for what I wanted to do. Eventually, it was very clear in my heart that I was not going to hit 40 while I was still employed. And so it doesn't matter that was happening around the time that COVID had just kicked. I told myself, you know what? I set myself this goal. I have learned and I've earned my stripes, and so I'm just going to step up on the plate and make it happen. And it's been a very rewarding journey. So at Rubicon Landing, what we do is just transaction advisory, and I'll explain further within the presentation what this is. And I'm deliberately, leaving out what investment operations and fund management and product development insofar as private equity and private debt investment is concerned. And apart from that, I still did my papers. So, even when I left, the traditional working spaces for actuaries, I still continued doing my exams. It wasn't easy. It wasn't easy. I do recall one time the HR asked me, Teresa, we've registered you to do CFA. And I looked at her and told her, but I'm not interested in CFA. And she looked at me and asked me, do you want to grow? Do you want to grow? Do you want to get into management level? And I said, yes, but I do not want to do CFA. So again, many guys will not understand, especially in the non-traditional side, they'll not understand what you've done. And that is interesting for us because what it means is that you get to show them by how you do your work, which then will come in. And, the last two slides in my presentation are very important in terms of just, how do you consolidate yourself in a workplace and how do you grow? So apart from just working, I also got opportunities, many of them, to represent Centum in a number of businesses at the board level. I was very young. I think the first board meeting I went to, I was probably 25 or 26. And this was Aeon. So I sat with the board, and everybody on that board was above 50. And they were looking at me, this small girl, and wondering, okay, so, so it wasn't the easiest of things. But yeah, it gave me very good experience. And as we speak, I sit on the board of Absa Life and also Collection Africa Limited. So again, those experiences do help later on in the career. And something special about me is that my spirituality is a core that binds my entire life together. And this really defines the value system of who I am as a person. In our industry, there are a lot of things that are very edgy on, your integrity and your professionalism, and therefore the core that really enables me to make decisions when I find myself in such limbo situation is really my spirituality, and that has been a flag for me the entire of my career. Again, family is important. I have mentioned before that I had to take a break in active career growth to take care of my family and have children. So that is also very, very important for me. And yeah, to succeed and to be able to be bold enough and do things, you will fail. And I have had my fair share of failures. There have been many. There have been many, and some of them have been grand. Some of them have not made me sleep, for a number of days, and have reminded me the days I used to just, sit on coffee and do my actual exams. So yeah, failure is part of life, and it is in failure that I have learned the most important things that drive my life and have made me successful. And so I'll delve right into the private capital markets. And I don't know how many of us here do understand what it means, to the private capital market. So yeah, so in the private capital markets, what we're talking about normally is transactions that are done and they're not done in the public space, meaning you will not find them in any quoted exchange. That is what private capital markets is all about, and it's diverse and it's wide. We have transactions happening in debt space. We have transactions happening in equity space, and we have a lot of other transactions that are in between there. They are quasi equity. Now, a lot of information that is publicly available is actually just a tip of the iceberg. For example, I just pulled out this information on your screen regarding the deals for 2022, and you can see what we have is that we do have about 13.6 billion worth of deals done in 2022 in East Africa, about 168 in number. Kenya, obviously, being the leader. If you're doing this kind of business in East Africa, you want to be in Kenya. But this isn't the entire story, and this is a critical thing that I want to say, that majority of the transactions that are happening are actually not reported for very many reasons. I personally did 2 transactions that were sizable in that same year, 2022, and it wasn't anywhere in any of this documentation. And not just the deal maker, even the PwC report, even the KPMG report, they weren't captured anywhere. So normally when you're working in these private capital markets, they're very discreet, and there's a lot of trust that goes into the way of just guys sharing with you the information. And by the way, when you're looking at this 13.6 billion in 2022 that has been reported, it doesn't even include debt. And we all know here that most of the businesses are actually financed using debt. So and that right there is the opportunity for us and for you, budding actuaries, that the greatest value is actually created in the most inefficient of markets. So we do have a lot of inefficiencies in this market, and this is where value is created. If we sit back and go to the roads that are well trodden, then we only, have scraps left for us to pick up. And where you can exercise a lot of your technical skills and leave a big and a good impression is when you go to places where people do not even know what you're capable of doing. And that really sums up my career, because I do recall the first meeting that I had, and I sat with a client. This was in investment, and he wanted us to prepare for him an investment policy statement. And with me in the room were just guys doing actuals, and not actual CFA, and they had, all of them were accountants. And we sat in the room, and the guy explained to us what he meant and what he wanted. But fortunately or otherwise, I am the only one who would be able to understand what he wanted and what would put together for him. And why is that? Because of my actuarial training. Therefore, many of these guys looking for value in the investment world, especially when they're looking for very specialist kind of structuring or even policies created, they will go to guys who have a finance background, and they will not consider actual students as guys who can be able to do this for them. But we are actually best placed to do this. And therefore, and for me, the learning there was, how do you showcase your skills in a manner that actually creates most value for the institution that you're working for. So yeah, this slide was basically to just show you there are a lot of transactions, there's a lot of space, and there are very, 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 very few guys playing in this area. In fact, when you look at the investable funds, this is just where are we sourcing the funds for investments. And you guys know, we do have banks, we have insurance firms, and we have pension funds. They're holding assets, and these assets are growing every day. They're growing quicker and quicker. Unfortunately, the investable assets that we have in the market are hardly growing. In fact, right now, all these institutions invest most heavily with the government or the central bank, but they are continually looking for better opportunities in the alternative space, meaning which opportunities are there that will give them decent returns, they'll give them diversification, and they'll also give them, some bit of non-correlation with what they're currently seeing in the market. And these opportunities are actually found in the private or what you call the alternative assets. And I know when people talk about alternative assets, the only place guys think about is real estate, but there is a much, much, much bigger space in offering debt and also offering private equity. All of this in the private markets. And why do we think there's an opportunity there? This is where these particular businesses or these opportunities are placed to give the most high yields for the funds that are available. And therefore, if they can be properly analyzed and if they can be properly packaged, then they actually form a very steady source of alternative investment opportunities for these collectors of funds to allocate. But who has been doing it currently? If you look at how our intermediaries are structured, you'd think the big investment bank and stock brokerages, funds should be able to do these particular transactions. The reality is that they do not. And therefore, we end up having majority of these transactions run by just accountants and lawyers. Now, what opportunities do we have in private equity and private debt? Remember, we are saying private equity is investments in equities or stocks of companies that are not publicly listed. So when you're talking about that, if you think about investment in those particular opportunities, then you can play in one of the two ways. We normally call them the buy side and the sell side, but I want to simplify it further and bring it to, you can play in the side that normally holds the market, holds the funds, the guys who hold the money. And who are these? These are the funds themselves. So for example, you do have a number of private equity funds. Some of them are close-ended, some of them are open-ended, some of them are investment companies investing in private equity. They go around looking for opportunities, they invest, they add value, and then they exit. That's a simple business model for them. The others primarily invest in private debt. So they collect money and they say, we're going to utilize this money to just, invest in debt for businesses, and they can be very specific. For example, if you look at a company like LCB, what they do invest is, consumer debt or debt in renewable energy. So they're very, very specific and they're very niche oriented in terms of what they're looking for. So what has happened? The principals of the funds have gone out, raised the money, and then say this is the strategy on which you're going to invest this particular money. And what is that strategy? They say the strategy is, let's say, to invest in mid-sized private businesses in this sector, in this geography, or to invest in debt for these businesses in these sectors, in this geography. So that is the broader framework of the fund. But then there are a lot of activities in there that is required, and majority of it is extremely technical in nature. When I worked for Centum Group, early days, I recall I was hired as a private, as an investment, as a risk analyst. In the team, we had 3 investment analysts, and we had myself as a risk analyst. And we used to work together as a team. And what we used to do is the investment analysts would actually, originate opportunities, do financial modeling, do investment appraisal, and what would come in is to do the allocation of the risk budget and evaluation of risk in the investment appraisals and so on. But at some points, the line was very gray, because it would reach a point where everyone in the office from the investment side would actually disappear and go to do the exams. And normally they would take almost a month worth of leave, and I would just be left there. And it doesn't mean that the work would stop. What would then do is that I would also have to do the investment management work as well. So what is investment management? This is where you devise the fund strategy. They can participate in fundraising, meaning you're walking around with the principals, trying to pitch your fund strategy to possible allocators of funds to be able to give you their money to be able to invest. After that, you can also do deal origination, where you're looking at the sectors where you're playing and say, I think investing in, let's say, for example, Orbit Chemicals would be a good idea. So there, it's all about research. You're looking at what companies are doing very well in your area of scope, and trying to just narrow down and come up with a pipeline of deals that you can invest. The next thing that is really big and key is deal modeling and valuation, and that is where a lot of value is placed in some of these processes. But remember, I have not seen, because I've interacted with a lot of accountants and a lot of CFAs, and I have not seen anyone who's as technically able to do modeling and valuation as the guys who've done actuarial science. And this is where you can add significant and immense value. And I do recall personally, I would actually start my models from zero, or start my models on a clean Excel sheet. And that's not to say that the other guys could not do the modeling, no. But the discipline and the rigor of your training to be able to do that is extremely high, and therefore your skills will be required and needed and very, very much appreciated when you come into doing the modeling and valuation. And this is important because remember, at the end of the day, you're saying this is the price at which we are comfortable to buy these assets. Of course, modeling is one. There are a lot of other softer things, but you can imagine just how much of value that piece of work stream is. Yeah. Yet, a majority of the learning is actually learned and taught by external parties. You hardly ever see someone who's done CFA and they're out of school and they're able to model. But you can get someone who's done actual science out of school, they've just done their papers and they're able to do modeling. And therefore, there's a lot of value for you guys that you can actually be able to add in that area. The other thing is, just general portfolio management and optimization. And here we're looking at, you're looking at an investment portfolio consisting of private assets, and asking yourself, is this portfolio allocated in such a way that is giving me maximum return for the risk that I have taken? And if not, how am I able to, rebalance my portfolio? And in the context of private equity, what does rebalancing even look like? So that is what happens in the portfolio management and optimization. And then there's a lot of reporting, and you're reporting internally to your board and or your bosses and your board, and also to the owners of the funds who've given you the money to invest. Could be shareholders or your LPs if it's a fund in nature. And then, of course, now managing the exit. And this is where you're selling a business. Remember, you bought a business, you created value, and then you're selling it. And then over time, the business has made some bit of money. The second bit is on the risk management bit, which is more of a support role. And I'm saying this very, very carefully. Support because, you're using you are not necessarily originating new business, but rather you are providing information to the guys who are going to take decisions. This is where we stand at. This is how much risk we've taken vis-a-vis the budget we have. This is how we stand from an operational perspective insofar as risk is concerned, and so on. So many funds will actually look at actuaries and actuarial students as very well skilled in the area of risk management. The other areas are compliance and operations. Now, compliance and operations, it can be done by anyone. It's extremely simple. It's just these are the rules and this is how we are doing. Not necessarily where you would play, but if you find your foot on the door in compliance, I'd strongly advocate that you take it. Then you can showcase your skills on the other two areas. And fund operations as well. This is on settlement, onboarding, follow-up, and transaction support. Again, if you find a space there, again take it and then grow to the other two areas, which are what we call more of the core functions of the private equity or private debt funds. Now, just to give some bit of examples, Centum was a private equity house. And what they did is to just invest in businesses and projects. So they were extremely agnostic in terms of their strategy. So their strategy, at the time would span from green, very early stage investments and go all the way to mature investments. And from a sector perspective, they would be everywhere, from industrials to real estate to technology. So, it was extremely wide. And that is because of the role within which the business was formed. In fact, I like telling the story. It's actually the only business that was quoted at inception. And the reason it was formed was to give Kenyans an opportunity to participate in the good assets that were coming into the country after independence. And therefore, just working there, what it did is just completely opening up my mind in terms of just thinking about businesses very differently. And today you're working in insurance, tomorrow you're working in motor vehicle, the next day you're working in agribusiness. So, the wider it is, the more you become very wide and very generalistic. But remember, the key skill that you're looking at here is your business acumen. So when you're doing investment, it's at the end of the day, you are breaking it down to, I am buying this thing at X, I am managing it over a period of T years, and I'm going to sell it at Y. How much money have I made, and how much risk am I carrying? So that is purely really what happens in these private investment opportunities. And by the way, it doesn't really matter whether it's a real estate deal or whether it's just a technology deal. For example, I was part of the team that was buying the Two Rivers land. At that time, we were just buying land, just buying land. It was opportunistic. But later, the Centum team sat, and this is now the investment team. They sat and they said, wait a minute, we have bought it. We just can't sell it, or we can't just hold it. How about you master plan, create some bit of value, and then exit? So again, the plan was growing. You have an asset and you sit with it and say, how do we make the most of it? How much is it going to cost us to do this? And do we have resources to be able to do this? And do we have time to be able to wait for what you're planning to materialize? And so on. And also, just how many other partners do you need to bring on board? So remember here, what you're looking at when you're doing these particular transactions is not necessarily checking the box, doing a complex model. It's looking at it as a business and asking yourself, for my business, for my company, or for my employer, or for the shareholders, or for the LPs, how much value are we going to create when we allocate these resources in this particular asset? And then what is the opportunity cost? How much would you be allocated? Will you be getting if you allocated someplace else? So yes, there's a lot of learning that you will have to do early days, but it is not learning things that you're incapable of learning learning is just, just understanding, the strategy, understanding how the business that you're in will operate. And then now you exert yourself when you're there, looking at the opportunities differently, bringing out, different nuances of doing it, and so on. So that is private equity and private debt, and this is where you are holding the funds. In my next slide now here, it's the opposite side, where you're now owning the deal. This one, you do not have the money, but what you do have is the ability to bring together the person with the money and the person with the need for the money. Now, this is where significant value is created. And I think, as I walked through, the various, trajectories of my career, this is where I settled and I said, I think I thrive most, I find more satisfaction in doing transaction advisory. And why are we calling it boutique? We're calling it boutique because it is very specialist and it is not regulated per se. So it is you're looking at, for example, a company comes to me and say, Teresa, this is where our business is. It has really grown. We need capital. We are unable to access the capital from the bank. We think we'll be leaving too much value on the table if we do an equity transaction now. Can you help us get debt? Yeah. So, and now that is a transaction advisory assignment in the debt market. So again, now the expertise there is an ability to be able to look at the opportunity, structure it in such a way that someone else can be able to buy, and someone that you have in mind. So you need to have scanned the market and known this is the investor profile that we currently have in the market. This is where I have my contacts. This is where their risk appetite is. This is where these are the mandates they do have. And so if I structure this transaction in this manner, then they're going to be able to allocate some of their capital in. And then you walk along with these people in this transaction to eventually closing. So there are two main areas of activity in this sell side. We call it the sell side. So there is a lot of business development. This is where we are originating the opportunities. For example, we are looking at, for example, micro lenders and finding, who can we work with that has a good book and requires funding to grow the book. So that is, you're building a pipeline and you're building your deals, you're originating investment opportunities. On the other side, you're also looking for investors. For example, you are asking yourself, who is collecting money every day and who's looking for a new home for the money, looking for a better return. So this could be anyone. They could be high net worth investors. They could be, fund managers. They could be your private equity businesses. They could be family offices. So you knock on those doors and you find out, what is your criteria? How do I need to structure a deal for you to be interested in it? So you have what the investors are asking, and you have a pipeline of what is in the market, what the owners of businesses or owners of projects are looking for. And then your job now is to match the two. And how do you match the two? You create an investment security or a product for them to be able to invest and for the others to be able to get the money. So a lot of the value is actually created in the business development, where you're actually going out there, discussing with businesses requiring capital, discussing with the investors who are looking for a place to park their money, discussing with the high net worth investors who just want passive income, or family offices who are looking to just grow their wealth. Anyone, liaising with the regulator and asking, what is currently happening, and how do you want us to structure this in such a way that this class of regulated businesses can invest in? Then after that, you go back now to the team that is usually a back office team that does the analysis, the structuring, and the negotiation. This is where due diligence is done, modeling and valuation. You'll notice that even at the sell side, we still do a lot of due diligence and modeling and valuation Why? Because, you want to understand the business very, very much so that you can actually be able to sell it to someone else. So the first task, which will take about 1 month to do, is to just do a very, very deep dive in the operations of a possible investment opportunity or issuer looking to raise money. So we spend a lot of time with them, evaluate them, look at their numbers, literally turn them upside down, understand everything, understand all the skeletons they have. If they have a loan book, we get the raw tape and actually analyze it for ourselves all the way historically from 10 years back, etc. So we're able to create we're able to know what kind of book are they carrying, and so on and so forth. So we understand the business, and then we prepare it for closing. What does it mean, preparing for closing? For example, you might go there and realize they have an issue or two. For instance, they do not have a credit committee at the board level, yet they're a lending business. So you help them to put one together. You might realize, for example, they have a weakness in some of the clauses. For example, some of their loans are not assignable. So you help in modifying, you help them to modify those contracts. So what am I saying? That you actually really go deep in the operations of that business. After that, that is when now you structure it and say, this is how you're going to put together a fundraise for you. And this is a period of time we'll take. Then after you structure, you agree with them. And then now that is when you go to market and sell the deal to possible investors. Remember, initially you've already been profiling them. So by the time you're structuring the deal, you already know what your prospective pipeline of investors are looking for. Then you come back and now, finalize and then do a book building and then close. So as simple as that. And as much as it looks simple, on a typical, to close an equity deal, it will take, a minimum of 9 months to close. And to close a debt deal, it takes 2 months plus. So it is actually, quite some bit of work, and it is deep, but it's extremely rewarding. Every time a transaction is done, if you do one transaction, then you get to really, really, really go deep in it, that you're able to know so much about it. You can literally, sell it as though it were your own business. And those are normally the most rewarding transactions that you do. And especially when, they stay with you for quite some bit of time. So I'm going to proceed to what employers are looking for. And as I said earlier, this trust, it doesn't really matter which industry you are at. While we at Centum Group own the UAP, I got a chance to stay there. They had some bit of problems. And I sat in their life business, and also sat on their board for a number of years. And again, it really doesn't matter, because these are still the same skills that they would look out for and they would want. So the first one is what you've always had. It's all about your attitude. It will certainly take you much further than your papers. So when you walk into an opportunity, you've been given a role, and probably you're just starting, they probably just told you, just sit there and do, and just punch in the claims that have whatever it is. So as simple and, as it is just how you do that piece of work. If you come in with an attitude that and you're the best, nobody will want to associate with you, and nobody will want to show you how it's done, and everybody will want you to fail. And therefore, your attitude really is extreme. I wouldn't emphasize it enough. It's extremely, extremely critical. When you were doing the graduate program for the Centum Group, I remember I was part of the team for the first 2 cohorts. When you see, initially the algorithm would actually just pick out the best of the students from their grades. Yeah. But when they came for the interview, what we interviewed for and what we looked out for is just, who are these people? Who are they, outside their academic qualifications? So are you willing to learn? Are you willing to unlearn what doesn't work? And are you willing to relearn things that are going to work? So that is critical, and will take you places. So for instance, you'll get in and you'll be told, for example, analyze, KCB and come up with a model. You'll sit and you'll ask, how is it done? It is, and they tell you. But what will spike the interest of your boss, who's probably the head of research in that asset management business, is just, how much further have you gone? Have you learned something? Have you, changed one or two things here and the other? Are you willing to take corrections and do so positively and proceed? Now, the differentiator here is your ability to demonstrate that you have a good attitude during the interview. Yeah. So, and how do you do that? It's by giving examples of what you've done before that shows that you do have this particular attribute. So investors are, employers are hiring, and they're hiring your attitude. They want a person they're able to work with, a person who's able to learn, a person who's able to grow with them. The next thing is work ethic. And this is just ability to get the job done. So are you doing the job, and are you finalizing? Are you researching behind the scenes, or are you just doing the basic minimum that has been given? So for instance, if you've been told, we're looking, want to see, whether or not you should venture into Tanzania. It's been a difficult market. We want to see whether we can do business there beginning this year. So are you just going to look at Tanzania, or you also go beyond Tanzania and look at, other Southern Africa markets? Now, these are now the things that are now going to make a difference in terms of just, who is this particular person? Does he really put in the effort necessary to enable the work to get done? And how is that work done? Is that work done to a level of quality of his standard, below his standard, or above his standard? And then how is he working in? Can I send him tomorrow to meet a client of mine? Many of the times, and this is extremely common in the investment field, you will have meetings that come, and many of them are they're not planned for. You have an investor who's called and asked for something, so your boss will peep out of the office and look generally who's best dressed to meet that particular client. So just understanding the nature of the organization you work for, and then being appropriate for the work ethic that works for that organization. I mean, if you're working for a financial tech company, you'll show up in a trouser in a t-shirt for a meeting, and it's okay. Not so much so if you're working for investment bank. So again, just learning the work ethic and getting your work done, and doing your homework to just get it done to the level it's supposed to be done. Grit is also very close to that work ethic, just keeping going, especially when it's very convenient to give up. Oh, I didn't have this, or I haven't learned that, or I haven't done. When you ditch your excuses, you find your results. So this is what employers are looking for, and your role is to try and demonstrate that you're able to do these things during the interviews, or during the attachments that they give you, or during the brief engagements that you'll have with them. It doesn't matter where. It could be in that conference. You don't know what the investor, what the prospective employer is trying to look out for. So when you're walking and you're carrying yourself around, how is your attitude, how is your ethic, and how is your grit? So these are the things that will actually, get you in. But what will make your career thrive? Now here I do have a list of 8 competencies. 8 competencies that I wish someone shared with me earlier when I was starting my career. I would probably have, had it much easier. Now, you have been given the opportunity. How then do you rise very quickly to the top? And how do you thrive? How do you get the best assignments landing on your desk? How do you get, the best clients? You are the one who's serving that particular client. How do you get that deal that transcends across, 2 continents or 3 continents? So it's all about your execution. Are you able to execute entrepreneurially? Meaning, are you able to find the right solution for that assignment at that point in time? What do I mean? A solution for yesterday may not necessarily work today. So are you finding a solution that is working and executing on it? a lot of the challenges we have now, and especially for us who are dealing with out of Gen Zs, is you know what, the ability to just get the job done is a problem. So you need to demonstrate and you need to continuously show that you're able to execute and do so entrepreneurially. And entrepreneurially is actually looking for novice ways, easier, smarter, faster ways of achieving the goal without compromising quality and clients. Next is about your strategic thinking. Are you able to think strategically in terms of just how you carry yourself along and how you take on your assignments? The third is commercial awareness. And commercial awareness, I cannot stress this enough, especially at early levels, because that is where most of us miss it. We will spend too much of our effort and time being technically good and too little of the time being commercially aware. What is happening? What has been done before of that nature? For example, if I am doing if I am doing a debt raise, at this point in time, I need to be aware of what is happening in the macros at this point in time. Where is the pricing at? I will not say, oh, last year we priced at 17, so I'm going to price at 17 now. Yeah, yet everything else has gone up. So you need to be very commercially aware in terms of just what is happening around you, what is happening in other markets, and how can you borrow that into what you're doing now. Next is driving and owning business results. And here, it's, you know, sometimes you'll be given an opportunity or a task, but you want to just complete your piece of the task. And then you'll hear someone saying, oh, the document is at legal, or the document is at compliance, or it's got operations, you know, for loading it to whatever. Now, remember, the job has not been done yet. So, and the result hasn't been achieved yet. So the persons who really thrive are the ones who own the business result. So it's not about your task. It's about what do you want to achieve as a firm? What do you want to achieve as a business at the end of the time? The fifth one is leading change, and this is changing yourself and changing others. And for example, now, you know, this is how we've been doing things, but we know things are changing continuously. How are we becoming better? So a champion of leadership always gets noticed. Now, this is very uncomfortable because leadership could actually mean, you know, tremendous failure. You know, you need to be able to put your skin up as long as you are not breaking a leg to be able to, you know, lead the change wherever you are. And this do not have to be, you know, significant, you know, massive transformational changes, especially early in your career. They just need to be changes for efficiency, changes to make your customer happy, changes to make work delivered much quickly, changes to lower costs, and so on. Just within your small realm of, you know, you can make small changes here and there, and then propose to the right people. And allow me to speak to ladies here, because this is where we fail a lot, because we lead initiatives, but then we do not want to take credit for those initiatives. Please find your voice. Find your voice. Find your voice. You have done the work. You've worked so hard. Please do not let someone take credit for your work, and especially the gentlemen who are very keen and very, you know, quick to take credit. So find your voice to air what you've done, to air out your recommendation for change and how you have made it much easier. To the right people, the people who need to hear it. Yeah. Please, I cannot emphasize that enough. Please find your voice. It is going to be uncomfortable, but that is what is going to make you get noticed. Remember, for you to thrive, people in the right places need to know that you're actually making a difference, so they can give you a bigger area of influence. And the only way for them to know is when you make them aware. You're going to make them aware by the quality of your work, but also you're going to speak up about what you have done or demand recognition subtly for the effort that you put in. The next is developing yourself and others. And here it's all about continuous learning. If you're in a particular industry, there are always new things that are coming up, there are new ways of doing things, there are new skills, and so on and so forth. So you're going to continuously learning. You develop yourself and you also develop others. Very quickly, you realize, you know, you've been brought in, you're an analyst. Before you know it, there's an intern who's brought below you. So, I mean, utilize that resource to get yourself to another level. And normally, as a rule of thumb for management, we say you don't promote where you are. You need to be working a particular level up before we promote you to that level. So again, if you're working at an analyst level, you need to be working at senior analyst level, then you'll be promoted to that, then you aspire to work at a portfolio manager level and so on. That's how it works. And then obviously collaboration and influencing. Sometimes, just proposing a particular deal or a particular transaction is gonna, take a lot of, you need to influence others. You need to be able to sell your idea to others. Now, selling is not a skill that many of us, especially guys who've done actuarial science, are known for. So you need to be able to sell. And I remember one time I was talking to one of leading actuaries here in this market, and he was telling me, Teresa, actuaries who can sell end up becoming they end up becoming very successful. And I was asking him, how so? And he said, it's because, you don't need to go back and, call someone else to help you to sell. You're there with a client and you can sell. Now, the idea is really getting yourself, or harnessing and softening and sandpapering, if this is a word like that, your selling skills, so that you are not just the one who is the nerd at the corner of the office, just taking your Red Bull and working on your model that is blinking after 2 seconds. No, you need to also be able to translate your very hard work into communicate it to the people who need to hear it in a language they can understand, and then work with others. Hardly ever will you do a transaction alone. In fact, one of the things that I probably missed to say in the transaction advisory is that as soon as you agree on commercial terms, then the next thing you're doing is assembling a team. So you'll work with a lawyer, you'll work with a tax consultant, you'll work with an accountant, you'll work with a HR consultant when you're doing your due diligence. So how are you able to collaborate, work with all these people? But remember, you're the center of it and you're the one who's driving the transaction. So ability to collaborate and influence, and also now finally demonstrate resilience. Resilience now is, is not working. You're really trying to get that approval from the regulators and they're not giving you. How do you not give up? How do you make it your problem and you wake up and still go there, until you find the result that you want out of it? So these 8 skills are extremely important in making you to thrive. And it doesn't matter which area and which line of career that you choose. But if you work on this and you develop these competencies, and remember, these competencies work differently for each level. If you're leading an organization, you'll be looking at executing entrepreneurial very different from someone who's actually entry level. So again, just thinking around it and developing these ones, even as you develop your technical skills and you work very hard to finalize your papers. Now, I just want to go back slightly, and I can see my time is done, but I want to just go back a little bit in terms of just what you're talking about here, from you now venturing into a field that is not the common. So remember here, when you're trying to to find an opportunity elsewhere, you will have a lot of knowledge that you have, and this knowledge is important, but it may not necessarily be valid or relevant to your audience or to the company that you're applying for. Assume today you went and decided you're going to go, let's say you're going to work in, or you're going to find work in let's say a company like Amitrak. So you have done a lot of actuarial and mortality modeling and so on and so. That information is important, but it is not relevant insofar as this particular opportunity is concerned. So again, what that information has done is open up your mind in such a way that you're able to think from different perspectives. So bring yourself present to the opportunity you have and showcase yourself, not as an expert in that area, but a person who's able to quickly learn and quickly grow and add value as you go. Now, in most, I don't know whether they still do it, but guys like PwC, and KPMG, etc., who take huge cohorts of actuarial students and convert them into accountants, etc., etc. So the reason they would do that is because they realize these people, you bring them on board, they are very analytical, they're very fast, they learn, and they actually bring business results very quickly because of just how they do their work. Now, it applies to whichever industry. It applies to whichever industry. Now, it can't even, when it comes to transactions and portfolio management and private equity and private debts, you will come in. It will be difficult because there'll be a lot of barriers to entry initially. Just find your space, but the minute you're in, I assure you, you're going to be a star. I recall, because of the experience that my employer had with me, they were very open to hiring a lot of actuarial staff. In fact, students, sorry. In fact, I remember there's one of the criteria they had that at least someone must have done accounting, a qualified CPAK to join the firm. But they actually dropped that requirement for people who've done actuarial science. Why? Because of the experience that they saw with me and a couple of other guys that I hired. So the thing is, you also have other people who've walked the path before you. And these people clear up the way for you if they actually exert themselves. And I remember we hired a lot of additional guys to come in who've done actuarial science, and suddenly they recognize that people who've done actuarial science actually have significant value to add in the sector. So it is not as tough, from an entry perspective is concerned. When you see an opportunity, please throw your heart in and give your best in that interview. And I assure you, if you get your foot on the door, it's very likely that you're going to actually get considered, because the skill set that you guys possess is actually what the industry is looking for. Are the opportunities there? Opportunities there, they are there, and they are massive. Majority of the investment, brokerage firms and investment banks here just do the bare minimal. They only do trading in the stocks and trading in the bonds. But as we've seen, that's not where the real value is. That's not where the real transactions are happening. So there is a lot of value to continuously, be added. There's a lot of value to be added by us when we actually go and do these things, especially on the private side. Now, businesses and boutique firms are normally small in nature. My business only hires 5 people, so we are very few. And that is deliberate, because you not continuously have transactions, and you've had some of the transactions will actually take some time, 2 months, a month plus to close. So there'll not be many, and they will not be shouting on top of the roofs that, hey, we are here, we are hiring, this is what you're doing. Many of them are very, very, very quiet, but they are there and they're making a difference. So the idea is, when you're showcasing yourself, please put it as an area of interest, so that when guys want to hire and they're looking around, then they can consider you. But also importantly, just be aware of what is happening in the market, because when they go interviewing, they want to hear that you're aware of these particular transactions that are happening in the market. Then you set yourself up above, and then you decide where you want to take your life. And I think that's pretty much it from my end, and I will just stop there.